Hey everyone, it's Mozart here. Overall, today is probably a key day for crypto, and it will be until the end of trading. So, at the time of recording this video, important data will be released in an hour. Probably the second most important thing for the Fed's supply decision now is the level of employment in America as a percentage, and we are currently forecasting 42%. It's really tough to guess what the actual level will be. So, if you look at the history of forecasts for this level, the average column, as well as the actual results, you'll notice that the experts surveyed before always get it wrong. Almost always. So, the final values are either in the red, meaning they're either higher. Almost always. So, the final values are either in the red, meaning they're either higher than the forecast, or in the green, meaning they're lower than the forecast. It's not even a 50-50 chance. Forecast. Or green, below forecast. It's not even 50%. If we were just flipping a coin, we'd be more accurate at guessing than the experts' predictions. Although the spread here is very small, it would seem to be either 4 or 4.1%. But even then, they often get it wrong. So, I can't really predict what this indicator is going to show. But I know for sure what will happen. Most likely, well, not for sure, but with a probability of over 90%. If right here, today, in an hour, it will be. If the number is green, meaning lower than 4.2, then that will hit the market really hard. And then, with a very high probability, we'll see, in the best case scenario, if all the stars align, a retest of that level and a turnaround upwards, or more likely, a breakout of this structure and a drop to the height of this structure down, which is roughly around the $87,000 to $88,000 mark. And then, with a huge and high probability, we will see in the best case, if all the stars align, a retest. This level is the reversal upwards or, what is more likely, a breakout of this structure and a move to the height of this structure downwards, that is, and their height is approximately exactly at the mark of $87,000 to $88,000. It's more likely to happen if we see a green number here, but if we get a red number at 4.3%. For example, the ideal scenario for crypto, the absolute best scenario, would be if I remove that interference, then that would be the bottom. With a very high probability, the chances of us at least going back to the 200 moving average, which is $98,000, are pretty high. Most likely, we'll hang around here for a bit and then break upwards, filling in all these gaps. This breakout will be key before the update from H. That's if we get a red number, which is more likely. And with a lower probability, we'll go back to 98% and just be stuck here chopping around. And altcoins will pump. Dominance will be falling. If there's a consensus here, then according to this table, the least likely scenario is, considering how often forecasts get it wrong, 4.2%. Well, let's say, in this case, everything will depend on how the stock market behaves, how the dollar, DXY, trades, and how the Nasdaq trades. But if there's a consensus, then most likely, for crypto, that'll be a positive sign. Because all this drop, well, it was based on the expectation that the unemployment forecast would also be worse than expected. So, unemployment will be lower. For crypto, that's worse. So, unemployment will be lower. That's worse for crypto. And if there's a consensus, we'll most likely head to 98 one way or another. Either like this, or somehow like that. We're going to head over here to test this level. Technically, bounce likely, if above $94,700. No volume. Yes, I wrote yesterday in the Telegram channel that in general the probability of a rebound is very high. To break the trend, we need to close above $94,700 on the hourly chart. We did that, and it's rare to see so many green candles, but there's no volume. This is crazy money on futures across exchanges. No volume means short-term traders were wiped out. Now we're rising with no resistance, as 1 to 3 month holders remain. Those who haven't sold yet are in a buffer zone, hoping for a price rebound. No volume now, and a negative event could cause a sharp drop. We'll blow through this. No support levels here, a key point. And right now we're rising because there's no resistance. There are no sellers left, since there's this line of 1 to 3 month holders here. And over here, we have those who haven't exited. This is the buffer zone for those who haven't sold in the last month and are just sitting on their losses, hoping the price will come back. There's no volume right now. And if something negative happens, we could drop like a rock. We'll blow right through this. There are no support levels here, which is a key point. I already mentioned this yesterday. Or rather, I apologize, I showed the chart yesterday. Here are the two main densities, the concentration of money. The first one we passed was around $98,000, and it's above 394,000. I wrote about this, and right now we're sitting above it. If you look at the horizontal volumes, yeah, that's exactly how it is. Here you go. This is something noticeable. This density up top, and this density we have down below. Here is the main basic order block, and now depending on where it goes. So, the price, after this report, will determine the next move. The worst case scenario would be if we test this and then just head straight down. And it gets even worse if we close with a new 4-hour candle below yesterday's low. That means below the $90,400 mark, which is roughly where yesterday's low was. If that happens, we could be looking at 87 or 88, right here. And it gets even worse if we close with a new 4-hour candle below yesterday's low. So, below the mark of about $90,400, which is roughly where yesterday's low was, that's a pretty bad scenario. We could be looking at 87 or 88. So, over here, there's an additional technical picture. We've broken the trend on the upward side. Technically, not just on the hourly. Wiki. Here's a breakdown, but at 4 o'clock the wiki is technically at 4 o'clock. Wiki also had a structure. We're following the structure, you know, like we go 1, 2, 3, 4. The previous 4-hour candle broke this upward trend, which closed 40 minutes ago. So here, technically, we have a setup for a reversal. And if there's at least some consensus, I'm definitely leaning more towards a reversal. And at the very least, a retest of $98,000, depending on the unemployment data. And if there's at least some consensus, I'm definitely expecting a reversal. And, at least, a retest of $98,000 of unemployment benefits. Here, if there is a turn, or, like this right away, because there will be a cut. And so we'll fill in the gaps here and still head towards $98,000. That's roughly what I'm expecting in case of either a consensus or positive numbers. But if we get those positive numbers, we'll probably just shoot up right away. Upward without any retests, no matter what. As for the fundamentals and the technicals and the blockchain. So, in the blockchain, we have the number of short-term holders who went to lock in their losses on the exchange. Basically, yesterday it hit some peak values. I'm just gathering information. Over the last year, we'll see yes, indeed, yesterday it was about $80 million, a little more. Yeah, when we hit those levels, a bit higher or lower, we either bounced off them hard, which is basically what's happening now, or we reversed. For example, we reversed here, we just bounced here, we just bounced here, and then we reversed here. So, we reversed here, plus or minus. We reversed here, we bounced here, and now it's unclear what's going to happen. By the way, we just bounced here, but this line, the range of $80 to $100 million, is the loss zone for short-term holders, which has always been a key point. Over the past year, it's been a point of reversal or strong bounce. Yesterday, I also showed this on the Telegram channel. By the way, I share all the trades in the Telegram channel. Here they simply bounced, by the way, speaking, but in fact, this line, the $80 to $100 million range, is the loss zone for short-term holders, which has always been the point. Over the past year, we've seen reversals or strong bounces. Yesterday, I also showed this on the chart in the Telegram channel. By the way, I share all the trades in the Telegram channel. The link to it is in the description under this video on YouTube. There are no such deal signals. The full day was recorded with a loss of minus $62 million. It was a loss rare in markets. During January 2024 correction, there wasn't a single full day of losses. If we rewind a bit, even during the correction in January 2024, there wasn't a single full day of losses. There were losses on an hourly basis. I showed the chart in the Telegram channel on an hourly basis. Just on average, how much was there over 24 hours? Divided by hour for the losses. And here, overall for the day, without breaking it down by hours. And, just like that. And this result isn't just for the short-term holders, but for the entire market. As soon as we lock in a loss, even if we're already ready to move into a bear market, there's always at least a chance of a serious bounce. You can see the same thing with the bull run of 2021. There was only one point like this. There was only one day. That was on February 28th. There was a recorded loss of $243 million. Again, it's not that important. It's not so much about how much the loss was. What's important is that it happened, basically, in a bull market. The same goes for the bull run of 2017. So basically, there were only 3 days here, but one was a total flop. After that, there were no more. All the following days were profitable. And now we've got our first loss since October 10th. The first daily loss. It's small, but it's a loss. This is an important signal. It's an important wake-up call for the entire market. Next up is funding. So this is the hourly breakdown of funding without averaging. So, funding by the hour. Yesterday, it dropped to 0 for the third time. January 9th, it dropped to 0, minus 0.001. There, 1000th, December 29th. And it dropped again. It also dropped to about 0 on December 21st, so it fell to 0 3 times. It's normal for it to drop to 0 for an hour. That happens in bull markets. In 2024, Bitcoin saw a 21% correction. We're consolidating now. It's concerning when funding dips into the negative zone. Here we are consolidating, just like before, sometimes dropping to 0, and then it starts a new trending impulse. It's not good when funding starts to dip into this negative zone, right around that 0 area, and starts hanging out there. That means market sentiment. The players have changed, and there are very few buyers left. Very few. There's no strong bias towards buying yet. We're close, but it's not there yet. And this situation that exists here will most likely determine whether we go there or not. Further, the percentage of offers in profit is also not for short-term ones, but for the entire market. Yesterday, we were down 82.5%, 82%, again, that's very low. The 80% mark has almost always served as a benchmark for the peak of all corrections in regular markets. So, take a look at 2021, for example. We hit that first value from H, and then we don't drop below 80%. As soon as we go below 80, we tend to stay down for a long time and drop way lower. The same thing happened after hitting that value from H at the beginning of 2024. We dropped to 80, tested it well, went back up, and then fell hard, way below. The same thing happened after reaching H at the beginning of 24. Here we fell by 80, tested well, went higher again, further, fell hard, lower and lower. And that wrapped up a quick bull market cycle. The level holds up well. We broke through it slightly lower for about 12 days. There wasn't much liquidity back then. The market was more volatile, but this level has always held up against corrections. This also applies to the bull market before last. Just look at how well this level holds up. Here, we broke through it just a bit lower, but it was only for about 12 days. Not more. There just wasn't that much liquidity back then. The market was more volatile, but overall, this level has always held up against any correction. And here, there were corrections of up to 40% on Bitcoin, even a bit more in the following ones. The average purchase price broke through 1 week to 1 month, and we reached the average purchase price for 1 to 3 month Bitcoin holders, 1 week to 1 month, and we reached the average purchase price. Just so you understand, yesterday we touched it with a shadow. For those who have been holding Bitcoin in the range of 1 to 3 months. So right now, their average purchase price is $91,000. 90 to 940. Yesterday, we hit a low at around, well, $91,000. All right. 91 was the low. Basically, we broke through it. Overall, you can say we tested this line, and it works just the same in bull markets. Here in 24 we touched and flew up. In 21 we touched here once and flew up. In 17 we touched once. Here, we touched it again, but there wasn't a bull market yet. The floor hadn't been broken, but it works really well. And if we break down, like we did here, that's a huge risk of transitioning into a bear market. That's why I say going below is really dangerous. Going below $91,000 is very dangerous, especially if we start to hold that level. It's really dangerous, and especially to hold that level, so we can break through it with a quick bounce back. I also wrote about this in Telegram yesterday. We can't hold that level. That would be really bad. To show big capital doesn't see a bear market transition, we have net withdrawals. In the last 2 days of this dump, withdrawals spiked. In the combined Bitcoin and Ethereum from exchanges, we've seen a surge in output over the last 2 days of this major dump. Big capital buys Bitcoin and Ether and puts it into cold storage. They're not doing this for no reason. Next, also, URPD, distribution, horizontal volumes, a vertical visualization. I showed you this chart. So yesterday we hit this level. There it is, $91,000. And we bounced back again, more or less, closer to the center. The main density, it's called a control point, point of control. If we move over here and hold this level, well, the defense is already weak. There's a good chance we'll hit it. So, at the very least, this will be $87,000, which is almost 100%. At the very least. But we can't hold here anymore. If we move over here and start trading in the Trump zone, so-called, well, with a higher probability, we'll move away. And over here. And this is already closer to $70,000. And it won't smell like a bull market anymore. Well, at least, in the near term. That is, these are the data on the blockchain. Critical marks. Basically, we shouldn't fall further, and staying in this position too long is undesirable. Buyers get anxious, and we need buying pressure. Establish funding to utilize current liquidity. Otherwise, it exits exchanges. Without a market bounce, liquidity is ready to join. We'll find out from this data. We need to establish funding so that the liquidity that is currently in the system is used. Otherwise, everything will simply leave the exchanges if we do not get a rebound in the market, which this liquidity is ready to join. And whether it will be ready or not, for the most part, we'll find out from this data. So I wish us all good luck. This was Mozart, and basically, let's see what comes of it. See you later, everyone.